Welcome back. Well, as we speak, just take a look at the markets. The Nifty was down, we mentioned, around 150 points. And as we had that chat with Axo Nobel, it's done a big U-turn, big recovery from the low point of the day. In fact, we're up close to around 250 points from the day's low. The Nifty Bank as well had a sudden burst, and now it's cooled off. So the Nifty Bank, from being down close to 150 points, it was up 150 points, and now it's trading around the flat line. It appears there's either some big flow that came in, or there's a big short covering bounce that did take place in that span of from 10 to around 15 minutes. So a sharp spike is what we saw, just in the last 15 minutes or so. But let's focus on RITES. That's the management on the show. We have with us Mr. Rahul Mithal, the chairman and managing director of the company. Hi, sir. Good morning and good to see you in. Well, let's look at the way ahead. I recall you telling us earlier that in FY26, you're working with a 20% revenue growth and you're expecting a 10% growth on the bottom line with margins around the 20% mark. You want to reiterate the guidance, change it a little bit, higher or lower? Please go ahead.
Good morning. Yes, I recall that, and you see the trend of orders which came in Q4. We got about 150 plus orders totaling to more than 1,400 crores, making us achieve the highest ever order book. We closed the year with an order book of nearly 8,900, 9,000 crores. So with that, and the kind of operational efficiency which you saw in execution in Q4 also, we are raring to go, and we are aspiring to see a growth of revenue of about 20% in the coming FY and corresponding growth in the bottom line.
All right, so 20% growth and 20% growth on the bottom line with 20% margins is what you are guiding. 10% growth on the bottom line with 20% margins.
No, I think you're revising the bottom line growth as well to 20%. Is that correct?
No. The top line growth at 20% and the guidance which I said aiming to about 10% growth in the bottom.
That stays. Okay. What about orders? Because your order book is very close to the 10,000 crore mark. The way you're winning orders, maybe in the next couple of quarters, you will reach that 10,000 crore mark. But at the same time, there are some orders that require some sort of confirmation on, right? One is the Bangladesh order. What has happened out there? The second part is you had a cancellation of order coming in from the UP. And there was also this MOU with Middle East for the railway corridor. Can you give us an update on all of this and give us a sense of what kind of order inflow are you targeting for this year?
So let me go one by one. The Bangladesh order is a confirmed order. In fact, the order book of 8,900 crores includes all orders which are confirmed orders on which work is happening. In fact, for the Bangladesh order, the prototype designs are in the final stage of approval. There are about 5 types of coaches, and we are aiming to start delivery by latter part of the year. It's 200 coaches, so the phase-wise delivery will start. As far as the order inflow is concerned, this year saw a 60% growth in the fresh orders coming in vis-a-vis last year. So we got fresh orders of about 5,500 crores. We maintained a strike rate of 1 order a day. We maintained our strike rate of 1 export order in every quarter. So with that, as I said, we have ended the order, the year with an order book of 8,900 crores. And we are confident that we'll be able to maintain this trend in the coming FY also.
So you're maintaining 5,500 to 6,000 crore worth order inflows in FY26 as well?
Yes, so we are aiming that, as you said, reaching about 10,000 crore order book definitely in very soon in maybe the next or the third quarter, and being able to aim at least the same strike rate of 1 order a day and at least the same levels of addition in order books.
Okay, all right. Sir, if you could help us out, what would the mix look like between consultancy, turnkey, if you could tell us domestic as well as exports? Give us a brief product revenue mix, so to call it, for this year.
So you see the order book, which at 8,900 crores has 3,000 crores in consultancy, 4,200 crore in cost plus turnkey, and 1,350 in export, and balance in leasing and our subsidiaries. So consultancy and export, which are our core focus, continues to get us many orders. As I said, we have broken the hiatus for the last 4 years and we did not get an export order. And because of that, you saw this dip in the export revenue, nearly nil in FY 24-25. We have continued to get one export order every quarter, and the way the visibility is for the coming FI, we are confident that we should be able to maintain this strike rate. Consultancy across segments, we continue to get orders, whether it is the rail infra sector, whether it is the building sector, whether it is studies in new alignments, whether it is the metro studies. So across sectors, we are getting orders. Internationally, internationally also we are getting orders. We've got fresh orders of about 400 crores in pure consultancy in the coming in the last year in pure consultancy, besides the export orders.
Right, that's great, sir. So, if you could give us a sense on the orders that you're L1 in, because you've told us the order book entails what you've got confirmed. How many orders, or what is your L1 position right now?
So you see, whatever is L1 at whatever stage when we are declared L1, we declare it to the stock exchange. So it won't be correct for me right now to give information which is still in work in process. But as I said, to reiterate, all orders which are included in 8,900 crores are finite orders where agreements and LOIs have been received.
Got it. And what about your exports? You said that exports last year were virtually nil. I'm looking at export revenue per quarter, 5 to 7 crores for the last 5 quarters all through. With the order contribution that you have from exports, which is close to 20% that you said right now, how much can you generate in terms of revenue from exports this year?
So this 1350 crore order book, which was amassed in the last 4 to 5 quarters, this will now start execution in this FY. And that will give a big boost to our top line and bottom line. And we are expecting at least about, a minimum of 300 to 400 crores revenue coming in this FY. So we're going to start deliveries starting from end of this Q1 or at least beginning of Q2. And let's see how the rest of the quarters pan out. But definitely this is going to contribute in a big way to our top and bottom line.
Okay. All right, sir. Appreciate you joining in. Thanks a lot for giving us all of those details. We'll hold you to some of these numbers, and we look forward to chatting up with you as the year progresses. Well, on that note, though, time to slip into a short break. As we do that, here's some good news for all our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates. All of this at your fingertips. Download the CNBC-TV18 app from the Apple Store or from the Google Play Store. Or you can simply just scan the QR code that comes up for you on the screen.